Something that's been very important, especially as times went on and as I've been building out my dividend growth portfolio over the years, is picking either stocks or ETFs that are going to allow me to sleep well at night. Now this is because as time goes on, life is most likely going to get more and more busy. And I can only speak for myself, but a lot of us are not going to want to have to hold on to positions that we're going to have to worry about on a daily basis. Now in this video, we're going to go through 3 specific dividend growth ETFs that I would consider sleep well at night ETFs. And this is because of their overall strategy, diversification, and what they've offered historically. Now, if you want to dig into these 3 dividend growth ETFs that are going to allow you to sleep well at night, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first dividend growth ETF that is without a doubt a sleep well at night ETF is ticker symbol DGRW, or the Wisdom Tree US Quality Dividend Growth Fund. Now, I've said it before and I'll say it again, this is one of my favorite high quality dividend growth ETFs across the entire market, and I'm going to share with you guys exactly why. But it says right here in the Wisdom Tree website, why DGRW: gain access to the current investment landscape of US large cap dividend growing companies by applying quality and growth screens. It also says use as a complement to a high yielding dividend strategies or as a replacement for large cap quality strategies. Now, even though right as of this moment, I currently do not own a ton of DGRW, this over the next year or two is going to be a staple throughout my portfolio, and I have plans to make it a foundational position. Now, the reason DGRW is definitely a sleep well at night ETF is, for one, like we talked about earlier, the historical performance has been extraordinary. The ETF is up over 190%, and this is since around 2013. Not to mention, DGRW does pay a dividend on a monthly frequency, which we're going to dig deeper into here in a second. One of the bad things about DGRW, I will say, the expense ratio is kind of expensive at 0.28%. Now, one of my favorite parts about DGRW is the holding breakdown. The top 10 holdings are some of my favorite companies across the entire stock markets. All in all, around 300 different holdings, but the majority of the portfolio that DGRW tracks are things like Microsoft, Apple. Then we have AbbVie, Johnson & Johnson, Broadcom, Procter & Gamble, the Home Depot, Coca-Cola, Nvidia, and PepsiCo, to name a few. Now, DGRW is going to be exposed to a little bit higher beta because technology is going to be the biggest portion of this ETF, which, especially for younger investors that want their portfolio to grow as far as in size, this could definitely be an appealing option. Now, DGRW does also pay a monthly dividend, like we said. The dividend yield is pretty small at 1.69%, so DGRW is more of a growth ETF, although the fact that DGRW hasn't paid a dividend monthly for several years now and raising it consistently is also another selling point. Not to mention the average annual total return since this ETF's inception in 2013 for DGRW has been around 12.47% with dividends reinvested. All in all, like I said, DGRW is a very, very high quality sleep well at night dividend growth fund that you definitely should look into if you haven't already. Another super high quality dividend growth ETF that is also a sleep well at night ETF is ticker symbol VIG, or the Vanguard Dividend Appreciation ETF. Now, it says right here on the Vanguard website, seeks to track the performance of the S&P US Dividend Growers Index, passively managed full replication approach, and remains fully invested. Now, VIG is also a position that I'm looking to build out sometime near in the future, and the reason I haven't been buying too much VIG or DGRW is because I've been buying a ton of the third ETF that we're going to go through here in a second. But just like DGRW, VIG has a track record performance of amazing success. The ETF is up over 243%, and that's not even including dividends. VIG is also super cheap to own with a 0.06% expense ratio, does pay dividend quarterly, which we'll see here in a second, but for the dividend growth investors that want a little bit more exposure to growth, VIG is definitely one to look into. Now, this is also because the technology sector for VIG is going to be the largest portion, meaning that this ETF has the potential to move quite quickly when technology moves. The top 10 holdings are things like Microsoft, Apple, Broadcom, a lot of similar names here compared to DGRW, which makes it no surprise on why I'm also a fan of this one. But around 343 positions, this ETF is super diversified with some of the best, highest quality companies in the world that not only have the potential to grow, but pay dividends and also have historically paid more and more dividends over time. VIG is definitely on my top list as far as dividend growth ETFs, and that's also because it does pay a dividend. 1.85%, it pays a dividend quarterly, but another cool thing about VIG is that the dividend growth rate is pretty fast. You can see that just around 10 years or so ago, VIG was paying around 35 cents per share per quarter. Now, as of recently, 92 cents and 77 cents per share per quarter as of the last few quarters. So for those dividend growth investors out there that want exposure to dividends and also massive growth, VIG should definitely be on your watch list. Now, the last and final dividend growth ETF that is definitely a sleep well in an ETF and makes up a large portion of my overall portfolio as of right now is ticker symbol SCHD, or the Schwab US Dividend Equity ETF. Now, SCHD is the main reason why I'm not currently buying a ton of DGRW or VIG, and that's not because I'm not a fan of the other two, but it's simply because I'm just trying to build up this position before I start moving into the other ones. But SCHD has a simple objective. It's to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. SCHD, just like the others, has also grown substantially over time, up around 200% since 2011, not including dividends, has a very cheap expense ratio also, just like VIG at 0.06%, pays dividend quarterly, which we're going to go into in a second here. Now, one of the things I don't necessarily love about SCHD is the top holdings, and this is not because I don't like these names. I obviously like these names enough to buy into this ETF, but it's just because some of the names on the top 10 list are not necessarily my favorites. But all in all, I still believe in SCHD's overall methodology, and I'm also a huge fan of this ETF's dividend growth that we've seen historically. A 3.5% starting yield more or less, and dividend growth that's been paying dividend investors more and more historically over time is one of the main reasons on why I started buying this ETF around a few years ago. Now, as of right now, I currently have around 600 shares of SCHD, and I'm trying to keep buying shares until I reach 1,000 shares. And then at that point, I'm going to start digging into my pockets and buying consistent shares of things like VIG, DGRW, or even SPY. Now, this is because as of right now, I have a goal to get my total monthly dividends up to a certain point, and buying shares of SCHD because it yields just about double that of DGRW and VIG is going to get me to that goal the fastest. Now, once again, I'm not saying that SCHD is necessarily better or worse than DGRW or VIG, but as of right now, I'm buying more until I hit 1,000 shares. Simply put, if you are a dividend growth investor and you're looking for a sleep well in an ETF that has had a great track record, at least historically over the long term, SCHD or the Schwab US Dividend Equity ETF is another one to have on your list. If it isn't already, of course. So there we have it. Those are 3 different super high quality dividend growth ETFs that are most likely going to allow basically any dividend growth investor to sleep well at night. But lastly, I have a question for you guys watching this video. If you could only choose to hold on to one forever, and that's between DGRW, VIG, or SCHD, which dividend growth ETF would it be and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.